This is the MTPredictor weekly update for April 29th. Well, we had an eventful week last week. We had the Fed meeting, get that out of the way, options expiration. A lot of data that came out last week as well. And this week we've got a full economic data set, schedule set, and probably the biggest part of that will be at the end of the week, Thursday and Friday's employment numbers. So let's take a look at the last time we did the weekly market update. We were in correction mode, and I said, is the correction over? The reason I felt the correction was going to be a bit muted or a little less severe than maybe some were expecting was the fact that here's the weekly chart of the S&P. We had our strong trend filter here into the strength band, the gray band at the top here, some weeks ago, back in here actually, telling us that there would be more upside ahead. And when we get these pullbacks, when we tend to get these pullbacks while the STF is strong, the tendency is that they're shallow and then go on to new highs. And again, I showed that a couple weeks ago. Here was an instance where the STF was strong, on the pullback was fairly shallow, on to new highs, and some other examples. So you see, we came into major resistance on the S&P. That major resistance was basically this decision point. I'm going to put the Elliott waves on here. So the decision point off the top of wave 1 back here. This was the crash of '08, the bottom of '09, and so this top of wave 1, this decision point here, was a significant area. We did finally come into that. So once this area, wave 4 DP, got taken out to the upside, again we explained, if you can go back to some of the weekly updates, once they take this area out to the upside, the tendency is that we then see this area, the top of wave 1. In other words, this whole 5-wave pattern down will get wiped out if they take this DP out, and that's it's taken a couple years, but we finally got to that area. So that kind of gives you some history on the why we're in this area, the tendency as to why we moved into this area. Once we get into this area, obviously we would expect the market to correct, and that's why I was saying a number of weeks ago, once we hit this area, that we should expect a correction. We've got a correction now. The question is this over? I think based on the close that we've gotten last week, STF still showing some strength, though the strength is coming off. We'll see if we can get to new highs here, maybe on the Dow mini, on the weekly chart of the Dow. I'm sorry, this is the weekly chart of the Dow. A little clearer, you can see the 4-wave pattern that has emerged here, the wave 4 support in here, and the pullback, again, strength on the STF on the daily, on the weekly YM here. Fairly shallow pullback, and we'll see we can project up wave 5 here using the tools in the software, and we'll see those levels here. That minimum wave 5 would be the next target to the upside. Actually would be the second target. It kind of coincides with the DP, the Dow's DP resistance here, which we haven't touched yet, and that will come into play right around 13,440, 445 area. And then wave 5 itself, that minimum wave 5 target, sits around 590 or 13,000, almost 13,600. So a couple of numbers to look for. So we'll see if they're close to taking out the prior high here in the Dow. We'll see if they're able to do that. The Dow has been the stronger market on a number of days the last few weeks to the upside. So you can see it doesn't have much further to travel. Basically, if we take out 13,245, then we'd have a new high here. This previous high would get taken out. So that's what I'm looking for here. Not that we won't have some selling days as well, but bottom line is, whatever you're doing, you want to protect yourself. As we said on the correction, protect yourself if you're long. This, even though we may be expecting more upside here, if we do get that upside, we would be approaching, in terms of Elliott wave, another potential correction area. So, got to be mindful of that. And let's take a look at the Euro US dollar here. Remember we had kind of go back here. This is the daily chart, by the way, the Euro US dollar. I'm just going to go back a little further here. So we had some, here was a TS3 sell signal that came in prior. That was a 6.5 to 1 trade there. The one that followed this TS1 here was an 8 to 1. In other words, 8 times your initial risk. So on a $348 risk, taking out about $2,800 of profit there. This kind of sloppy move down, it did come up as a 5-wave pattern down. Let me clear some of this off here, redo it. This 5-wave pattern down right into your minimum wave 5 resistance. So again, we would expect the market to correct at a minimum back to this decision point off the wave 4. We got the sell signal here on the TS4. The STF was red there, so just another standard trade setup. But as we were into this trade, you see an ABC pattern formed now to the long side, this TS4. So you'd have exited the short trade there to enter the long with the target there in the euro at 35.46. And here's that trade as it's progressing now. I think the 100% initial risk line is 33.03. We get to that point, then anybody that's in this would move their stop to the entry there at 31.48. So we'll see how this finishes out, and then we can kind of compare as this has been moving higher the last week. We'll take a look at the dollar index. Yeah, the DX here. Okay, it has been moving lower on the daily. Let's you see as the euro is moving higher, you see the dollar is moving lower. Obviously, this was the last buy signal. This was on the daily chart here. So you hit the 100% initial risk line, so you'd have a break-even trade there if you were into that. But let's look at the weekly chart of the dollar, because here was the major low in the dollar. Things have kind of gone off sideways here, but this last swing into the low here, this DP off of this swing is still out there. So we'll see after if the euro tags that target there. That's another decision point area for the euro, and the euro US dollar pair is going to have to make a decision at that point. If that holds as resistance, then we should see selling coming into the euro and buying into the dollar, and maybe we reach this area in the dollar, which is back up. It's around, what is that, 84, 85 area. Right, so we'll see how that plays out. This, you can see if I put the analysis on this, that is the ultimate target for this particular DP trade. So that's on the weekly dollar there. And then let's just pull in the gold chart. That's the 5-minute. We don't want that. Let's take a look at the weekly gold now. Again, the gold, anytime it's gotten below that 50 period and above the 200 period, or if you're just looking at the daily chart, you just put the 200-day moving average on the daily chart. When gold has come below the 200-day, in this case the weekly 50 period, it's been a good buying opportunity. Again, we've shown going back the last 10 years. And so I know a lot of professional buyers who are stepping in here or here, buying gold or silver. A lot of will use the gold chart to time their silver purchases, because the gold chart is much more liquid, more well behaved, if you will, than the silver chart. You can see the target there at 1902 and change on gold. And here's the current position, basically back to around the entry there at 1638 and change. So we'll see how this plays out, if in fact, as these have been great buying opportunities over the last 10 years in gold, if that continues. Like I said, I know some professionals that took advantage of this opportunity to be a buyer in gold and silver. So if we look at the silver chart, silver chart is, as far as our trade setup there, is pretty much the same with the TS4 buy here on the weekly chart. This target would take you to new all-time highs in silver. Alright, but the other thing in silver, and I don't put a lot of weight on the silver chart, we talked about this before, but we do have to pay attention, because we did have a major top here in silver when it approached that $50 level earlier. And so we could potentially look at this as wave 1, since this is a major high, and this B swing could be wave 2, and we've come into wave C here, obviously, and that's why we got the buy set up, as it's completed this ABC pattern, and the target would be a decision point off of the top of wave 5 here. But if this does end up being 1, 2, and this, we'd be looking for wave 3 down. If we just go down wave 3 using the tools in the software here, just make 3 clicks on the chart and it'll project wave 3 down, which would put us around 15.25, a little over $15 in silver. So again, I'm not putting a lot of weight. I put a lot more weight on the gold chart, but just looking at the silver chart, that is a possibility, which, if you're a long-term player in silver, would be probably be a welcome opportunity to pick up some more silver down around $15 an ounce. So may not be the worst thing that happens, but we'll see. We'll see how that plays out. And finally, let's just take a look at oil. This is the weekly chart of oil, above $100, and summer season. Oil, I guess tendency is to rise there. You see that here's the next decision point resistance area in oil there. The pattern is going to be, when it doesn't show us the pattern, the software is telling us there is no clear pattern here. Let's go to the daily chart. I'm just going to go down a little smaller time frame so you can see the last buy opportunity. This buy signal was a stop if you were long oil there, and then a new buy signal here at 103.58 with the target there at 111.55. Again, the daily chart. You get to 106.05, the stop would be at 103.58 at the entry there. So we'll see. Again, I'll have to. Here's a 50 period for a 50-day moving average here on oil, above the 200-day, but we're below the 50-day. So we'll see if they can get a close above there, above this 100% initial risk line. If that gets taken out, then we got a shot at getting to the target there at 111.55, which, to the consumers out there, which we all are, may not be good news. But we'll see. Obviously, you see the stop there. So anyway, that's probably the bulk of the roundup I think that we'll cover this week. I guess the main thing is that we'll see if the obviously the correction as of last week was at least paused, and we've got some more strength on that STF. We'll see if we can take that down to new highs. As far as taking out that wave 3 high we talked about, heading into wave 5, and obviously we'd be probably ES would be also pushing new highs as well, and then we've got to think about potentially another correction. So alright, so that's it for this week. Have a good rest of your trading week, and we'll see you back next Sunday night.